Well, thank you, Carol, for your wonderful introduction. And I know Kata's prepared, but probably today has some techniques. So next time we'll definitely fix it. And hello, everyone. My name is Li Wei. I'm here because I love teaching about financial wellness because Meryl mentioned that I was in the education. Yes, I have been the language education for many years, but when I came to the United States, I found out language is not a problem for many immigrants. Yes, it's a problem, but financial illiteracy is a big problem, not only to the immigrants, also to the locals. So financial literacy is not about getting rich overnight, but also about your peace of mind for your financial future. It is priceless. So I'm going to cover 4 parts: our cause, why we do this, our company, who we are, our concepts, what we teach, and our opportunity, how we help people. So everybody can see my screen, right? Find your financial empowerment business overview. And I don't know how many of you have ever been to San Francisco and see this pyramid, like a building. It's called Transamerica Tower in San Francisco. So this is their iconic building in San Francisco, and also it's where our headquarters used to be. And so I want to share with you why we do this. Before we dive into the detail, I like to start with why, because if we figure out why, we know how, right? So our mission is to help families from all walks of life build a better future, no family left behind. This mission is at the heart of everything we do, whether it's providing financial education, help families protect their wealth, or creating opportunities for people to take control of their financial future. We're driven by this desire to make a positive impact in people's lives. I would like to ask everyone on the call to consider these questions. Number 1, do you know someone who should hear this message? Can this information help you, your family, and your friends financially? And number 3 is, are you interested in building a financial service business? Let's pause and look at these numbers. From 2019 to 2024, the average American lost between $1,000 and $1,800 every single year, not because of bad luck, but because of financial illiteracy. That's money slipping through our fingers simply because we were not taught how money really works. And the impact goes deeper. Look at this statistics, the numbers. 79% of Americans feel financial stress. More than half live paycheck to paycheck. 62% of Americans carry credit card debts. 37% have already maxed out their credit card. 27% don't pay their bill on time. This is the silent cost for not having financial education. It's not just about dollars. It's about stress, lost opportunities, and broken dreams. But here's the good news. With the right knowledge and a plan, we can flip the story. We can keep more of what we earn, get out of debt faster, and build a better future. Well, where money is not a source of stress, but a tool for freedom. So that's the reason why our vision is to educate 30 million families by 2030. Many people just think, wow, Li Wei, that's so big vision. How can you reach so many? Start with one at a time. Right now, I'm so glad to see how many people online, right? We have 23 or 24 people online, right? We're changing each family. And I know you may share the information with those people we don't know. That's the reason why we're here, keep preaching the good news about financial freedom. And we also stand for financial education because what you don't know can hurt, not just in your wallet, but in your heart and mind too, right? Knowing less can cost more. If you can relate to this sentence, you can give me like a thumb up. Do you think you're sometimes you just feel like stuck? You just feel like you are live in one of the wealthy countries. Do you feel you live in your American dream? Why? And how many of us can confidently say, I save enough, I'm good for retirement? If you have this question and you want to find out the solutions, you're in the right place. We're going to share with you how we can help people. So now let's move to the second part, who we are, our company. Behind Transamerica is Aegon, a global financial leader with over 175 years of history. From the Netherlands to UK, across North America and beyond, Aegon and Transamerica provide life insurance, retirement, and investment solutions for millions of families. What this means for you is simple: strength, stability, and trust. When you plan your future with us, you're backed by a company that's been here for generations and will continue to be here for you. This is our parent company, Aegon. It's a Fortune Global 500. It ranks 124 and has branches all over the world, I just mentioned. And this is our company, Transamerica. In 1904, Amedeo Giannini founded the Bank of Italy with a simple revolutionary idea: make financial service accessible to everyone, not just the wealthy. This vision led to the creation of Bank of America in 1928. By 1930, Giannini expanded into life insurance through the acquisition of Occidental Life Insurance Company under Transamerica. In 1999, Transamerica became part of Aegon family, and in 2001, World Financial Group joined the Transamerica family. Through all the growth and change, Amedeo's core vision remains: financial services should be for everyone. Today, we continue his mission to ensure that every family, regardless of background, has access to the financial tools they need to succeed. Now let's look at the financial industry. In the world of money, there are few key areas where experts focus: banking, insurance, securities, and financial services. So banks, we know, they're where we keep our money safe. Insurance helps us plan for the unexpected. The stock market is where people invest in companies. And financial services, they are all about guidance and advice. So we're part of the guidance crew here in financial services. Our role isn't just to sell, it's about service, how we can serve our clients and for their best interests is to help them understand their options. We have the right training and approval, like licenses, to give advice on these matters. So no matter whether, so if you want to borrow loans, you use the loan officer. And if you want to find the right solutions to mitigate risk, you utilize insurance to reduce the risk. So you will utilize an insurance agent to help you find the right solutions. And if you want to invest your money, and you will ask a security broker to help you set up the account. And for clients, why we have this public offering price in financial industry, it's highly regulated. No matter which professional you go to, the price for the same products is the same across the line. So either you come to me or go to Cascada or Merrill, the price is the same. It's just about the service. So after we understand the components of financial industry, let's look at who we work with. We work with different financial companies to provide financial solutions, products to serve different purposes. I believe you probably are familiar with some of the brands, right? If you can type in the chat box and tell me which brand you know, you can write it here. Like probably a lot of you know the Fidelity, right? 401k. A lot of people's 401ks with the Fidelity and PIMCO and also Invesco, BlackRock, right? Yes. And what about insurance retirement? Prudential Nationwide, Transamerica, Voya, Pacific Life, Jackson, and wealth management, Aegon, Pinnacle, and other companies. So we're like money doctors. After we educate people and diagnose their situations, we provide the solutions combined with diverse financial tools from different providers. We just do not give just one company, we just stick to one company. You just only have this limited option. We care about our clients, their best interest, their needs. Suitability and affordability is our concern. So now let's move to our third part, our concepts, what we teach. We teach families financial cornerstones. If you want to take control of your life, especially your finance, and someday you become financially independent, you need to build on strong financial cornerstones and start to shift your mindset from spender to saver. So how do you do it? A strong financial cornerstone has 4 components. Let's walk through those real quick. Protection, growth, safety, tax advantage. So let's move to the next chart. This picture shows family financial needs. Before we provide any solution, we need to know what the family really needs and where they can improve financially. I just mentioned we're like a money doctor, right? We have to diagnose, talk with the clients, the patients about their different needs, just do the diagnose. So then we know their situation, the financial sickness, so we can give them right prescription. So my question for everybody here, how often do you do your physical checkup, annual checkup? Do you do it? If you do, you write 1. If you don't do it, do 2. You just write 2. Another question for you, how often do you do your financial wellness check annually? I don't say monthly, just annually. How often do you do that? Everybody, be honest with yourself. If you do it annually, you can just type 1. If you don't know what financial wellness checkup, you can type 2, and you are in the right place, as I mentioned. We will show you how you can analyze your financial situation, health. Then we'll find the right solutions for you to be financially well. Again, health and wealth go together. Sometimes the financial stress can really affect our physical bodies, right? Oh, wow, we have so many people here. They're financial, they do the annual check. That's great. So let's look at these charts. We have 2 sides, left side and right side, right? So let's look at the left side. We have 4 parts: emergency fund, mortgage, education, and retirement. So for emergency fund, this is crucial because life can be unpredictable, right? Medical emergencies, job loss, or unexpected expense can arise. An emergency fund usually is cover 3 to 6 months worth of expense. So we guide our patients or the financial patient or our clients or our members to do the budget, and we write down their monthly expense. So you know how much money you need to save to cover your 3 to 6 months worth of expense. So it provides you with a financial safety net so that you don't have to rely on your credit cards or loans in tough times. What about the second part, mortgage? So mortgage, we also need to understand this part is mortgage is one of the biggest financial commitments, right? You need to decide whether a 15 or 30-year loan is right for you. And if you want a fixed or adjustable rate, a good mortgage plan should fit your budget without causing too much strain on your monthly finances. So that's the reason why we need to do the financial planning before you get into that big commitment. I want to purchase a house, but are you financially well or ready to own a house? Number 3 is education. I know here all the parents want to send their children to their dream schools, but how much should we save for their schools? Or do we want our kids to get into the school loans they have to pay over the lifetime? So that's the reason why we need to start to plan ahead of time. If we want to help our children to go to their dream schools, maybe we need to start early, right? So either we needed to know this financial aid or 529 or other prepaid plan. The earlier we start, the more confident we will become when our kids decide to go to their dream school, especially Ivy League universities. And what about the retirement plan? Everybody wants to retire, right? You can write in the chat box, when do you want to retire? I want to retire tomorrow. But do I have enough money to retire? And how long I can live for the rest of life if I want to retire tomorrow? Do I have enough money saved up? That's a question for everyone here. So you can ask yourself, if I want to retire in certain age, how much do I need to save? And what's the plan out there so I can keep the lifestyle I desire? That's what we teach people. We need to plan ahead of time and save money with discipline. And let's look at the right side. The right side is all about protection. Take actions with caution. Health insurance. Everybody knows in America, medical bills, it's like sometimes give you big surprise, right? And but we also understand it's important to have health insurance. So we needed to discuss the experts to find out which one is good for us, suitable for us. And another one is life insurance. Many people don't want to discuss this, especially for people from some region. They feel this is taboo. It's like there have that superstition. If we talk about life insurance, it's about dying too soon, right? It's a bad luck. Actually, let's think about it. We pay like $100 per month for our car. How much is worth? Maybe $20,000, $30,000. What about our house? How much we pay for the house insurance? We pay maybe just $1,000 for a year, right? But the house may be worth $500,000 or $1 million. But what about us, our life? Am I valuable? Am I as valuable as my car or my house? So you can ask that question. So what's the worth? What's the value of my life? If you feel like you are very valuable, but do you have a suitable life insurance plan for yourself? It's not about dying too soon. It's about reduce the risk of dying too soon, so you can leave a legacy of blessings to your loved ones. They can live a better life, and your dreams can be carried on. And also another thing is very dear to me. It's very personal, because it's called long-term care. Many people say, what long-term care? They probably don't know the concept. So long-term care, so as we live longer, the need for long-term care is become more important, whether it's nursing home care, in-home assistance, or other forms of care. It can be very expensive. Planning ahead for long-term care ensures that you won't deplete your savings or put a burden on your family. My personal story is this. My grandparents don't save money for this part. They just think they will live forever and they will maybe pass away peacefully. But unfortunately, they were my grandma was paralyzed for 3 years. My dad was her long-term care solution. So my dad had to quit his job to take care of, my grandma. I know that's, yes, he showed that care for the parent, but he was physically exhausted, emotionally exhausted. And also he left us, me and my mom, behind. And that caused a lot of financial stress and a marriage problem. I just feel like nobody should give that burden to their children, and they can save some money so they can hold their children's hands. But the children can continue to fulfill their duty. So that's the reason why I just want to encourage everybody. If you don't know what long-term care is, please talk to the person who invites you and find out whether you need it or what it is about. And another one is estate planning. So this is very vital to everyone. It's not just about who gets your asset when you are gone. It's about ensuring that your legacy is protected. A living trust or other estate planning tools help you reduce taxes and avoid probate. That's very vital. And ensure that your wishes are carried out. In my husband's family, my mother-in-law didn't renew her will, and that caused big trouble. The family, don't talk to each other because they just feel like my mother-in-law didn't explain her will very well. So that's a problem. And people show their true face just in front of them. Just when money problems come. So we need to plan ahead of time to reduce that kind of risk and stress. So now you know the family financial needs, and we analyze them, each one. So then we know how we can provide the right solutions to solve the problems. So after we understand our family financial needs, we teach them how to build a solid financial foundation. So let's look at this like a financial foundation. What is the bottom? It's investment or protection. Meryl, are you there?
Yes.
Yes. So what's your thoughts? What should be your protection before you start to learn the foundation? The average people, they think make money, right?
Mm-hmm.
Yes. Many people told me, why protection should be the foundation? I think making more money, investment should be the foundation. Yes, many people think that way because they consider having money, that's a security. Actually, before you make money, you should set the safety net so you have the peace of mind to perform different things. Without this peace of mind, when you invest, if you lose, what happened to your family? And if something happens to you, what kind of things you will leave behind? So that's the reason why we put protection at the bottom. It contains your car insurance, your house insurance, your health insurance, your life insurance, your long-term care insurance, all kinds of insurance to make sure you have that solid foundation. So when you start to build the things above, you will have that peace of mind. And then we teach them we need to manage our debts. We don't want the debts become our choke chain, so we cannot breathe. So we need to find out the ways to reduce our unnecessary expense. That's the reason why we can do the budget. And so the third part is emergency fund. I just mentioned we needed to set up 3 to 6 month expense to handle the unexpected events, right? After that, we can start to build our assets, grow our money we use different types of solutions to accumulate money, to grow our money, so we can have more for our future. So this is our concept. We need to build our financial foundation from the bottom up. We focus on first, like a protection first, then debt management. After that, emergency fund, then investment. That's the right sequence. If we do this upside down, we'll encounter big trouble. And this is a slide that I really like. This is called a X curve. Have you ever heard X curve before? If you heard, you can share like a type 1. If you have never heard, I will just explain to you. And it illustrates how our responsibilities and wealth change through our life, and how crucial and important concept that helps us understand how to manage our financial responsibility and wealth over time. The blue line stands for our responsibility. The yellow line stands for wealth. Let's look at here. When we're young, we have little wealth. We're accumulating our wealth, but we are building our family. We have a lot of responsibility. That's the reason why here, the blue line, we have a high responsibility. We need to provide for our kids the shelter, the food, the schools, a lot of things. Just imagine if the breadwinner died too soon, what will happen to this family? So what kind of solution we need to have to prevent that risk? We utilize insurance, life insurance, to prevent for dying too soon. What about the right side? When we get older, our kids are growing up, and so they have their own family. We may have less responsibility, and also we accumulate wealth. That's the ideal situation, right? But nowadays, the layoff and the AI, and so we don't know. Later, we can accumulate, but no matter what, we have to do something, right? And we have less responsibility, and we have more wealth, but our body is not as healthy as before. So we may have a lot of medical bills to pay, or later we face long-term care situation. So the question for us, if we live too long, do we have enough funds to support our life so we won't outlive our financial resources? Another question is, if we get sick between here, we're building our family and we get sick, we cannot perform certain activities. So what can we do? So those are questions we have to think about so we can plan ahead of time. Like this side, if you will accumulate more money and we have less responsibility, we need to have an annuity, like a retirement plan to support us, have lifetime income. If we get chronically ill in the between, we may need to have long-term care plan to help us to pay for the care. Now we understand how to solve the risk from the curve. I want to share with you this important concept, the rule of 72. It's a simple way to estimate. Let's talk about something that can really transfer the way we think about growing money over time, how long it will take for your money to double, and it demonstrates the power of compounding interest. It's very straightforward. You divide 72 by your interest rate, and the result is the number of years it will take for your money to double. The higher the interest rate, the faster your money doubles. So let me ask you this question. How many of you knew that your money can double over time simply based on the interest rate you're earning? How many of you know that in the past? Because I just learned this. I work hard, I make more money. But many people, just a few people know they need to also work smart and to find a better way to grow their money. So Rule of 72 just shows us if you are financially well-informed, you can find a better place, better financial tool to help your money, the seeds, to grow so you have a bigger harvest. Let's look at the numbers. If your money grows by 4%, it will take you 18 years for your money to double. What about 8%? It will take you 9 years. What about 12%? 6 years. What does that mean? That means, like, if the 3 people, they save the same amount of money, 10,000, in the different financial vehicle, like financial account. The first one puts in 4%, the second 8%, the third one puts 12%. When they meet at age 65, do you see the big difference here? The first one only gets 40,000, the second 160,000, third one 640,000. Why do they have the big, like, a difference? It's because this person who gets the 12% works harder than the first one? No, it's about the knowledge, the mindset, right? If you spend that quality time in choosing the right place for your money to grow, you will get the best result. So you don't need to work that hard. You just need to work smart. Of course, you need to work hard too. So this is the power of Rule of 72, called compound interest. And this is called the wealth formula. I mentioned that your money is your seed. Time is our friend. The rate of return can be positive or negative. So you need to watch out. And inflation and taxes are silent killers to our wealth. We cannot control inflation, but later I will talk with you about taxes. How can we save more taxes so we keep more in our pockets for our wealth? That's called. So, a lot of people say, Li Wei, I make a lot. You see, that person makes a lot of money. I said, that's great. But how much money can this person save after tax? What's the net worth? That matters, right? So we need to remember this wealth formula so you can build your wealth. So this is called market risk and diversification. I just mentioned the wealth formula. There's called a positive and negative rate of return. We need to watch out that, because the negative return will affect our wealth accumulation. So we need to understand the risk. If your money, this is just a math. For example, you have $100 in account. If the markets crash, you lose 50%. How much do you have? Let's do a quick math. How much do you have? Everybody online, how much do you have? 100, just a 50% loss, $50, right? What about, like, when can you get your $100 back, just your principal back? Just gain 50% or 100%? So I've just give you an answer. Many people think, just 50%, you lose 50%, you just need to gain 50. No, you need to gain 100%. You just recover your principal, not just extra gain, just principal. That's the reason why we need to keep our money safe. So this is a chart to show you, like, how you can diversify your portfolio. So make sure you do not put all the eggs in one basket. So if the one account has some problem or markets crash, you still have other accounts. There's the money there is safe. You can use the money to handle the emergency. So how money grows? Just like I mentioned, like, there's some risk, right? So there's several ways to grow our money. Number one is fixed. Just like you save money in the CD in the bank, you get 1 or 2% interest. It's very safe. And you don't need to calculate too much. What about the second part? Second one, it's a variable. It's like shark's teeth, up and down. It's like just like market. You cannot predict when the markets will go up, when the markets goes down. Everything's unpredictable. What about the third one? Have you ever heard this before, or anybody share this with you? Because this is a hidden strategy, only known by many wealthy people or the Wall Street experts, and it's not known by the mainstream people. So now you know this after you attend our session. So this is called index strategy. It means when the market goes down, you get zero interest, means you do not lose money. When markets goes up, you grow with the market. Maybe you have a cap. So you will share the market, the profits with the company, and also the company will share the risk with you. So you do not lose money. This is the concept of index strategy. So when markets goes down, you don't lose money. When market goes up, you ride with the market. So never lose money. Warren Buffett said that, right? Rule number 1, never lose money. Rule number 2, never forget. Rule number 1. I just mentioned tax is a silent killer to our wealth, right? So we pay tax anytime. When you earn, when you spend, when you save and invest, when you pass away, you have to pay tax. So let's see how we can plan and also save more for our own wallets, right? So we need to look at tax now, tax later, and tax-free access, and look at the 3 categories. Tax now means you need to pay tax every single year. Probably many of you know this. You have checking account, your banking account, CD or stocks, mutual fund, or investment property. Do you need to pay tax every year? And you don't feel, I just make this much. IRS wants some share. Yes, that's the IRS always wants to get something from you. What about the second column? It's about tax later. Tax later usually related to the money you save for your retirement. So government wants you to save more money for your retirement. So in the future, we won't be a burden to them. So they give us the tax incentive to save money there. So give us some break. So we put the money in 401k, IRA, annuity, pension, Social Security. That means when the money put in, some part of the money, you don't need to pay tax right now. You pay tax when you withdraw the money. What about the third column? It's called tax-free account. That means you give the IRS tax. You pay the tax in the beginning, but when you grow the money, you don't need to pay tax. When you withdraw the money, you don't need to pay tax. You don't need to pay tax on the gain. You don't need to pay tax when you get the money in the distribution phase. So what are those accounts? Roth IRA. Have you set up your Roth IRA? Have you heard the Roth IRA? The second is 529. It's for kids' college education. And also another one is called 7702. It's a tax code for cash value life insurance. The money inside the permanent life insurance, the cash value is tax deferred. You don't need to pay tax when the money grows inside. And also, when you borrow money from your account, you don't need to pay tax. And have you heard this kind of a concept before? If you have never heard this kind of concept, I strongly recommend, please reach out to the person who invites you to find out how you can maximize the tax strategies to save more money for your wealth. And now it comes to one of my favorite topic, because I came from education background. I want all the students go to their dream schools, but many families, they have to look at the menu, the price tag from left to right, not right. I mean, from right to left, not left to right. So they have to look at the price tags, how much they need to pay for the schools instead of what kind of school my kids want to go. I want to fund their dreams. So we want to help parents to plan ahead of time how they can maximize the financial aid or so get more grants, the money you don't need to pay back. So the kids can go to their dream school, no matter whether it's like Ivy League university, almost 100K per year, your kids still can go, and with certain strategies. So let's look at this financial aid application, the formula. This COA stands for cost of attendance. SAI stands for student aid index. It includes parents' income, child's income, and child's asset. Use cost of attendance minus students' aid index. That's your financial needs. This is a very simple math. If you want to maximize your financial needs, what can you do? Minimize this. So this one will become big. So how can we minimize students' aid index? This is the formula. We need to know what inside the student aid index. What is includable? What is excludable? Means which assets do the schools look at? Then they determine how much money they want to give to you, and which asset they don't look at. So you can keep more in that category, so you can get more grants for your kids. So let's look at the includable side. So your checking, CD, savings, stock, bonds, mutual fund, 529, your business, farm, and investment property. Because for many schools, they think you have a lot of money or liquid, you can sell your house, you can sell your stocks and mutual funds to fund your children's college, so you can afford it. But some of the families, after talking with a financial professional, have a new strategy. They reallocate their assets from includable to excludable, usually 2 or 3 years before the kids go to college. So they have more time to reallocate their assets to, for example, they pay off their residential home, or they put more money, max fund their retirement asset, or have annuity, or they fund permanent life insurance, because those are assets are not asked. Usually, you need to disclose in the FAFSA. Sometimes maybe you need to disclose in CS's profile of them. That is for private universities, but they usually do not look at those assets to determine how much money you can get. So this is the formula. The people who know the knowledge can benefit it. If you don't know, you just lose the chance. So if you learn this concept and you can share with your family members or the friends who have kids who want to go to very expensive college, but they don't know how to fund it, actually really help them to fund their dreams. So retirement side. Everybody wants to retire early, right? Me too. But how we can retire comfortably? We need to look at the challenges, the inflation, market down, and outlives our savings. So everybody knows the inflation is quite high, right? Sometimes, especially during COVID period time, we had inflation around 5 or 6. That means use rule of 72 divided by our inflation. If you do not put your money in a place where your money can outpace the inflation, your money will lose the value. So you cannot afford the same amount of those groceries with the same amount of money in the next maybe 20 years. So we have to learn how we can beat the inflation. And the second is market risk. When we reach the retirement age, we need to make sure our money is safe. So Because look at this chart. The market has several corrections, right? We don't want our money lose the value, or the market crash, so we will lose all the savings. So we have to make sure our money in a safe place in our retirement time. And another thing, longevity, I just mentioned. We can live longer, but when we get older, we may need a lot of care. Do we have enough money to fund our longevity? Many people think, oh, longevity, that's great. We can live long. Yes. But if we live long, but without money, that's a problem to many families, a challenge to older people. So according to the study, the people with sufficient funds for the retirement actually can live longer and happier. So I just want to make sure everybody online can plan ahead of time and find the right solutions to start now, to take action. That's why I just want to share this chart. Start early. Let's look at the two people. One is called Mr. Save Early. The other is Mr. Save Late. Mr. Save Early start at the age 25. Just save $2,000 per year for 9 years, 18,000 saved. And Mr. Save Late just want to enjoy life and start save age 34, has to save 28 years. And look at the outcome. The first one still save more than the second one, even though the first one only saved 18,000, because time is this friend. Use the compound interest. You have more time for your money to double, right? So we need to start early. But some people will ask, Li-Wei, I'm in my 40s, 50s. I wish I could learn the message earlier. Never late to save, and also never early to start. You may think I'm too old to start. No, your life experience is other people's wealth. You can use your own lessons to inspire the younger ones to take action now, to save and with discipline and have long-term thinking. So then when they reach your age, they will thank you, and you leave that legacy behind to help them to have this kind of life. So that's the message I want to share with you. Don't think you cannot save. You cannot only save now, you can save the future for many other the generations to come. So this is our financial dream map. We need to learn how we can manage our cash flow, our additional income, and manage expense. So we have more money to come in so we can manage. The second, we need to eliminate debt, consolidate debt, and strive to get out of debt, the loans. And the third one is emergency fund. I just mentioned 3 to 6 months expense when you save. And fourth, proper protection, how much we need to protect in case life happens. And fifth, after we have the foundation, we need to grow our money so we will have our early retirement or a comfortable retirement. Sixth, after we accumulate our wealth, we want to leave behind with blessings, love, not regret, and chaos, right? So we need to talk with attorneys and set up the right plan. Either you will or trust. We needed to talk with the professional to find a way to reduce the estate taxes so we can leave more money to our loved ones. So we educate families and also teach them how to plan. This is our 6 core parts: protection, education, retirement, quality funding, tax saving, investment, estate planning. So life is sort of like it's like a chess. If we want to win in our life, we need to study to learn how we can reach the next level with a compass, right? So here, we not only teach you the knowledge, we hold your hands and show you what is the next step and you have the clarity and the confidence to take the next jump. After I finish my sharing with our cause, our company, our concept, now it comes to the end, our opportunity, how we help people. We provide two things. Number one, we provide the education platform. We want everybody to be informed with financial literacy so they can take control of their life, so they can leave behind with wealth and wisdom, so they can raise money-wise generations to carry on their family legacy. So we have this course, like right now you're in the course. So we teach them how money works. And if you want to learn systematically, reach out to the person who invites you. And also, we're not just stopped there. We want to help people to learn and earn. We give them opportunity to own a future. So let's look at these charts. Right now, which industry is the biggest? This chart just shows us financial industry, right? And the financial industry is the largest industry, but how many people who work there? That's a question. Listen to the statistics. Nearly half of all existing financial advisors are over the age of 55, and nearly 1/3 will retire the next decades and leave an estimated shortfall of 200,000, maybe more. That's a question for everybody. If this in the largest industry, but we short of the advisors, what will happen? Many people are left behind. They don't have the guide to help them to make that right decision. And many people think, I can depend on AI. Do you think AI can provide that human touch and really can listen to you carefully and also share stories with you? No. And this industry can never be replaced by AI, especially which requires human touch and to interactive the activities. So I just mentioned that we provide the education platform and also the entrepreneurship platform. So consider options. Option one, if you're satisfied with your career and discretionary income, consider becoming a client and take advantage of our strategy to help you to move from financial insecurity to financial security. Number two, as I mentioned, you can come to learn the financial knowledge so you can help your own family. At the same time, you can become a self-employed twin career. Start with part-time, get licensed, and get a quality profession with a great training program, earn extra money, and also you can control your time and create a career on your terms. And also you will enjoy some potential tax benefits as a self-employed. And third one is business owner. You can utilize our system, build your own business as big as your commitment and vision. Take advantage of a variety of incentives, including a lot of benefits. It's all about your decision. But no matter which choice you take, financial education is very essential. It's not an option. It's a necessity. Everybody needs to learn how money works so we can build our dreams. So this is our leadership team, and we have many people leaders from different backgrounds and achieve extraordinary success. So I just want to conclude our session with we helping families rise. And it's all about financial wisdom and also take actions, not future, now. And so because the future is in your hand, and if you take this knowledge into your heart and apply it, that will become your wisdom, and you will bless many generations to come. Thank you, everyone. I will give this stage back to Meryl.
Thank you so much, Liwei. Wow, so much good information. I will give it, do we do Q&A or do we go close
Yes,
first?
we no, just invite Dr. Wayne Xiong.
Okay, we'll invite Dr. Wayne Schill, who is also coincidentally my father, to help us close. He is one of the founding members, along with my mom, to start this, the first seed that Li Wei talks so much about, the first business owners of um, our office, in our offices across the US. So um, he has 20 years of corporate finance experience before being retired by my mom to do their own business together full time. And they have, together with people like Li Wei, have helped many, many families achieve their financial dreams. So, um, Dad, take it away.
Thank you, Meryl. And also, I want to thank Li Wei for delivering such a passionate talk on this topic that is near and dear to my heart. So it's, to a lot of people, finance is, boring. It's a lot of numbers, a lot of, charts. But, after you listen to Li Wei, I can feel that, this is very, life and very important to family, right? It's about family's life. It's about uh, saving and investing so that we can send our children to their dream school. It's about saving so that we can have the down payment for our first house. It's about our aging parents. How do we take care of them? It's about saving and investing so that we can have a desirable retirement lifestyle. So thank you so much, Li Wei. So I was invited to such a seminar 19 years ago. So in those days, that we did not have Zoom, and so I started my journey 19 years ago. So I was actually invited by a stranger, to our seminar in Columbus, Ohio. So at that time, so me and my wife, we have, two corporate jobs, two income, and, two children. Okay. So Meryl was 6, and her younger brother, Jeffrey, was 5. And on that day, it was George, who is my mentor. So who pretty much talked to us, gave us the talk like Li Wei just gave us. And it was very eye-opening to me, So I have been a finance professional for all my career, but what I have done is really making money for the company. Okay. And I have, a list of projects that is never ending, right? So I think if you have had a corporate job, you probably know what I'm talking about. You work on your projects and you finish 2, and your boss add another 3 on your list. So therefore, your list is not getting shorter; it's getting longer. So the better you are, your list gets longer. So, and never have really taken a serious look at my personal finance. So, I was able to, pay my bills. I thought that probably it's okay, but I just know that I must have left a lot of money on the table. So when we listened to this talk, we thought that we need to do something about it. The information is very insightful, and then we really need to take some action on it. So certainly, first I want to put my financial house in order. And then the other thing that I have seen is, the opportunity that we talk about is the business ownership. So Jenny and I have never owned a business before. But it's so intriguing, right? I really would like to be a business owner so that I can be my own boss. But in the meantime, because I have never done that before, I felt very tentative. I was not confident. I don't know whether, I'm cut for owning a business, right? So the good thing about this business is that, you can test drive it, okay? So it does not require us to quit our job, okay? So we can do it on the sideline at the very beginning. So we thought that's, why not? Let's just give it a try. And 19 years later, now we are here. And, over the 19 years that, Jenny and I, we have been building the business inch by inch. And then nowadays, now we are very fortunate. We are blessed, with a lot of talented people, good-hearted people. They join us. They join our crusade. You build yourself, okay, and then you copy and paste, and then you learn how to do this business, and you learn how to be an owner, and then you help other people to do the same. Okay, so that's how this journey has been like. So now we have about 330 licensed people on our team. Okay, and then we have altogether 8 offices across the country. So we have 2 in Dallas. We have 2 in St. Louis. We have 1 in South Lake, and we have 1 in Austin, Texas, Houston, Texas, and then we also, just opened 1 in the Bay Area in California. So, it's a great feeling to, not only for ourselves to have a profitable business and then generate a lot of income for our family. And also, it's good to see so many talented people, they grow in the business. It's just a great feeling. And also, my daughter, Meryl, she has already graduated from the business school of UT Austin. And now, she is also in the business, learning how to take the business, how to run the business when, someday that when Mom and I, retire, and then she's going to be running the show. Okay. So, which also give our clients a very nice feeling. They know that, their portfolio are going to be taken care of, for at least 50 years, and so because Meryl is in line, right? So it's such a great feeling that now, we are our own boss, and my mom is in China. She's 91 years old. The good thing about this business is the work that we do is like, it has a lot of flexibility in terms of time and the location. So you can tell that as long as you have a phone and a computer, and then you can just log on, to the internet, and then log on to the server over the internet, and then you can do the work. And so, now when I need to go back to China to visit my mom, I don't need my boss approval. All I need is get approval from my wife, Jenny, and so it's just wonderful. And also, the good thing about this business is that there is a lot of hand holding for you. So, our training, we provide training. And then because many people, they started the business on a part-time basis, they want to make some extra money in the business while they're having their day job, or they just want to have a spare tire, have a backup plan, in case there is a layoff. And that nowadays, with the AI development, many people, they are worried about their job security. So it's really good, to have a side gig. Okay. So we specifically put our training on the weekday evening, like tonight, and then also on the weekends, so that, for people, they still have their day job, it's okay to keep their day job. And what has happened to us is that, while my income at my corporate job is growing, 2-3% every year, right? So if you work on the corporate job, you know what I'm talking about, right? It's just barely to keep up with the inflation. But, the income in this business has grown up very, very fast. So if you do the right job, okay? So the most important thing is that you do the right thing for the clients 100% of the time. Always put the client's interest in front of yours, okay? So then you are going to earn their trust, and then they are going to, if you treat the client very nicely, the business will treat you very nicely, okay? So, so the income from the business, grow very fast, and then has exceeded my senior vice president position, the compensation at the Citigroup. So at that time, that I cannot wait for the company to give me a package to lay me off. So when 2016, that when they announced that they are going to downsize, they are going to lay off people, everybody was nervous, and I couldn't be happier. I volunteered for the package, so that I can, be fully dedicated to our business. So, okay, that is my journey, So if I can do it, you can do it. Okay, I just know that, certainly you're going to have a lot to learn. I have learned so much in the business. So my wife and I both have grown in the business so much. Our children have grown in the business so much. So just such a nice business. It's worthy of your best effort. So if you are interested in taking a more, close look at the business, and you want to know whether you are qualified to do this, okay, then just talk to whoever has invited you to tonight's webinar, okay? And then so we are going to, have someone to talk to you to go from there. All right, so thank you, everyone. So if anybody have any questions or,